This is the Real Estate Ninja. Hope you're doing well. We're going to talk today about the FDIC. There are big changes happening at the FDIC. And the reason why these changes are happening is because the FDIC knows how serious these times are. The story that I'm going to talk about is out of American Banker, and it's entitled "The FDIC Draws Bright Line Between Insured and Uninsured." And the reason for this is because, and I'm going to share a leaked video. Again, I've shared it a few times on this channel, but it's very important. It's 1 minute long that we go over this. And you need to realize how serious the banking system is, the crisis that's going on right now. A handful of banks collapsed. They are no longer in existence. Shareholders were completely wiped out in the spring of this year. One of those banks, one of the first ones to go out, the FDIC walked in and stated approximately 80% of these accounts are uninsurable. Like we did not insure them. We're not supposed to insure them. But I want you to understand something. They did insure them. And the reason why they did is because they were trying to stop a crisis early, but they cannot stop it. This is akin to what Ben Bernanke announced to the nation in 2005 when the mortgage-backed securities crisis was exploding. It was imploding in on top of itself, of the sheer weight of the lies and the deception that were going on with the mortgage-backed securities. Only 3 years later, after he said, "There's no crisis, we fixed it all, don't worry about it," millions of people lost their homes. If you're not getting ready for what's going on right now, this isn't like this is going to come in the future. The banking system is collapsing right now, and the Federal Reserve is trying to inject liquidity in at just record amounts. However, that amount is getting smaller and smaller. The Fed is trying to taper, which is going to cause lending to get tighter, which is going to cause an even bigger real estate crash. I lived through this real estate crash. I sold all my homes in 2006, knowing how big of a deal it was in 2005. And I'm telling you, what's going on right now is so much bigger than 2005. It's insane. If you want to take part in knowing and how to identify this, take the actionable steps, I'm putting 80% off course links right now to the real estate crash course, how you can prepare for the next real estate crash. That course will be 80% off, $199 by the 1st of January. It will never be offered at that price ever, ever, ever again. So before I talk about this American Banker story and talking about the FDIC drawing a bright line, and I know this may seem trivial to you, but there is a reason for this. I'm going to share with you a video. It's a leaked video that came out of the FDIC, not this last November, but the November before. And remember, I told everyone on this channel and on the Economic Ninja channel 2 Novembers ago that you will see the banking crisis start in Q1 and Q2, either one of those quarters of 2023. And it started mid-quarter 2021 and really ramped up in the beginning of the second quarter of 2023. I'm sorry, so both of them were 2023. Sorry, I'm going all over the map with my years. That crisis is so big. And the thing is, and I'm going to show you this video, this is what the FDIC said months before that even started. And I've also reported that 2 Septembers ago, September of 2022, the Fed, we didn't know until the springtime when the banks were already starting to crash, came out and said, yeah, over 700 banks actually contacted us and told us that they're essentially insolvent. They couldn't keep up with their capital ratio requirements. Okay, so what we did is we're injecting liquidity to keep them stable. Okay, this is so much worse than 2008 because this is happening before the whole meltdown happens. That's how big of a deal this is. The Fed repurchase window didn't open until January of 2009, approximately 4 months after Lehman Brothers had collapsed. So if you think for a second, because you don't see anything different, you don't feel anything different, well, guess what? It's different this time. It is different this time. It's bigger, which means there's more opportunity. So do you want to sit around and become a victim of last time, like you did last time, or do you want to do something about it? And that course isn't just for being able to, buy a ton of rentals. It's also to be able to save thousands of dollars on your first home. Because if you're not ready for it, you're going to have this opportunity pass you by. And there's not just one way to buy a house. So here we go. Before we talk about the FDIC changing these rules,
people need to know,
hold on real quick. Let me cue it up. This is a leaked video from an FDIC meeting where there are a bunch of high-powered bankers, lawyers, and the FDIC members. And I'm going to play it for you so that you can see it and think about what they're talking about, not this last November, but 2 Novembers ago. Okay. And just again, I want to impress this upon you. A lot of people are just they're not right thinkers. They all deal with normalcy bias. Oh, the stock's up. It's always going to be up. No, the stock market's actually collapsed 50% in value twice since the year 2000. So get ready for it because it's coming again. And the normalcy bias also, oh, houses are always going up. So they're always going to, yeah, they're going up today. They're going to go up tomorrow. No, millions of people lost their homes between the years 2006 and 2010. And they're still going to, millions of people are going to lose their homes again. So let me ask you this. Would you rather see the banks and hedge funds buy them all up like they did? They gobbled them all up in 2010, 2012? Or would you want to buy them? Are you going to be ready this time? Or are you going to sit on the line? Because the videos like this, before they're deleted off the internet, thank heavens this one's on X, and videos like this, they don't show you in the mainstream. And they're going to actually explain to you in this video why they don't want this kind of video in the mainstream. I thank God for the person that leaked this video. Please leak more videos. Here we go. Let's start this.
Accessible when people need to know, but I don't think you have much hope of reaching a public that doesn't have a professional need to know.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets. They just assume they're going to pay my claim. Right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do. That we want them to have full.
Again, I want to point that out. There's a joke and a chuckle. People, they're talking about the sheeple, right? What they think is you and me, but I'm doing everything I can to wake people up, that we have more faith and confidence in the banking system than some people in this room do. And you heard that chuckle. These are people that are going to profit off of you losing your home or your family members or your friends losing their homes. They will profit off of this. Most people that do not understand how banking works, they don't get how this works because we are in a fractional reserve and a fractional reserve lending system where money is created only when it is loaned into existence. All right. They are foaming at the mouths waiting for a crash. If you think for a second the Fed doesn't want to crash, you don't understand how banking works. The Fed is not federal. It's not here to be your friend. It's here to make money. It's a private bank. The question is, are you going to do something about it? And no protesting like Wall Street, Occupy Wall Street or any of that crap is going to work. You know how it works? You hit them in their pocket. You go take those properties. You scoop up those properties. That's the only way we're going to get our country back, is if the middle class becomes great again. I hope you understand that. Type it down in the comments if you agree with it. Make the middle class rich again. That is the only way these bankers are going to be afraid. They're super excited when you're poor and scared and you trust them with all of your money and so that they can destroy you in fees and interest. They're scared to death when you know how the system works. And that's why leaked videos like this are so darn important. So let's play the rest of it.
Faith and confidence in the banking system. They know the FDIC insurance is there. They know it works. They put their money in. They're going to get their money out. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people that charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out in the general public. I wondered whether there are some market tests basically being heard.
Okay, so now think about this. They are trying to actively hide the truth from you. That is what they're doing. That is what they did in 2005. I was a real estate investor in 2005, saw the run up of the interest rates, and I went, holy cow, no one's going to be able to afford these homes. I saw the blow off top in price, which is a normal reaction to prices getting high because the last little the fools, the dumb money moves into real estate, right? Because of FOMO, fear of missing out. And then everything comes crashing down. And right now, we are in a point that is so much bigger. The banks are already crashing, but why you are not seeing it is because of the papering over it. And there's a point where they stop, not because, now this is where I need you to understand, this is where the Federal Reserve is scared to death. There is a very fine line between being able to stay in command and keep, being in command and being able to stay in command. And that is called hyperinflation. We have a private bank that runs our money system. Understand that. And it is built that way is because of an incestuous relationship between the employees of the Federal Reserve and the government. Think about this. Our current Treasury Secretary, her name is Janet Yellen. She has worked for the Federal Reserve since the mid-70s. She hasn't known she never worked at a gas station. She didn't work at a grocery store. She wasn't an electrician. What did she do? She's worked for a central bank. That's all she's known. And so now she's working for the government. So who do you think she's doing her bidding for? The government that's paying her a couple $100,000 a year, if that? Or the people that made her stinking rich, the Federal Reserve? Think about this. This is straight up war. And if you don't get it, then get out of the fight, because we don't need a ton of people, but a few million people in this country that are ready and standing by to take advantage of this. That's what we need. We don't need people half-heartedly, not thinking straight. We need people that are ready to rock and roll. And honestly, this will lead to the greatest wealth you've ever seen in your life. I made my first $1 million by the time I was 26 years old in real estate. It took me 2.5, maybe 3 years at most. And it was so much easier than what I did with stocks, crypto, that's a whole nother story. But my point being is that real estate is the easiest way to grow wealth, because you not only get the money from appreciation when you buy right. Buying right now is nutball, straight up nutball. Prices are already starting to fall. And for everyone that goes, well, you don't know about my town. Yeah, guess what? In 2006, 2007, 2008, I heard it all from everyone after I'd already sold my homes. And I was racing to warn everyone. And they had no clue. And they thought they were so smart. And guess what? They all ended up broke, bankrupt, or divorced. End of story. I don't see those people anymore. And you know what they get? They get to watch these videos and go, yeah, I remember those days. I've had a couple friends of mine from like 15 years ago, 10 years ago, just come up and walk up and say, you're right. You were right back then, and you're right now. But you know what's even crazier? Are they actually doing something about it? No, most of them not. Most of them are not. Normalcy bias. It's a disease. So let's now share this story out of the FDIC. And I think this is very important to state, because the FDIC is drawing some lines, because they are preparing to watch your money go bye-bye in your bank accounts. What you think is safe, you're going to find out, because the FDIC is going to make it so blaringly clear this year, as the banks are crashing, which ones are insured and which ones are not. All right? So it says here, this is out of American Banker. It's entitled, FDIC Draws Bright Line Between Insured and Uninsured. It says, the Federal Deposit Insurance Corporation's Board of Directors, the people that I just, leaked the videotape with? Okay, cool. Finalized a rule Wednesday that requires FDIC-insured depository institutions to display a new digital official FDIC sign near the name of their bank on all websites and mobile platforms by 2025. You see, and on the thumbnail, you saw like Morgan Stanley and all this stuff. I'm not saying which ones are, which ones aren't, but there are a lot of online banks that they're popping up everywhere because they were going to a digital currency. They're going to get rid of physical currency after some time. That plan has already started, right? The quantum financial system, all that stuff is in play right now. It's moving, it's getting bigger. But there's a lot of these banks that have popped up, or institutions where you're investing your money and you're searching for yield. They are not insured by FDIC. So you may be going for yield and getting a lot of money. If you're not insured by FDIC, you're screwed. That money's gone. If the banks collapse, there's no hope at all. Okay? Outside of, I just want people to know, if this banking crisis is really massive, the FDIC already came out last June and said they're insolvent. Like, hey, we don't got any more money to bail out banks. So they went to the Fed and said, you're going to need, remember, they went to the Fed. The federal government went to the Fed, private bank, and said, you're going to need to cough up more higher insurance costs. And they went to the banks, and the banks went, we can't compete. And we're talking about banks. Bank of America said it. JP Morgan Chase, Wells Fargo, Citigroup. They all just came out. The CEOs were just in front of Congress proving to them, hey, we can't afford this. So they're already getting ready, and it's not a bailout. It's called a bail-in. If you don't know what a bail-in is, those are made legal through banking regulations and made legal around 2014, 2015, which means that if a bank collapses and they are not getting insured, the feds are not going to come in and fix this, right? And the feds always fix a little bit at first, just like Ben Bernanke did in 2005, and then they just let the whole thing go, right? They show that they're trying, and then they go, oh, this is too big. Sorry, we didn't see it coming. They do this on purpose. It's a big cat and mouse show. When they come out to a bank and they go, sorry, we're not going to bail you out, the bank now has the right, through bail-in laws, to go in and take a percentage of your money and everybody else's money to recapitalize itself, and they'll hand you what will then be deemed as worthless shares in the bank. If you want to see how this played out in real time, it happened in Cyprus and in Greece. Those were the two test beds. Since then, all around the world, banks have adopted this, all right? So they're going to make sure that these digital signs are available on these online banks, right? Now it says the FDIC approved the agency's 2024 operating budget as well as, oh, who cares? The final sign and advertising rule approved at the board meeting also requires banks to provide clearly displayed disclaimers that differentiate, now think about this, non-deposit products from insured deposits in instances where both types of products are offered. Now, I've explained this before. Just because you walk into a bank and you see the FDIC sign right there and you're like, oh, I'm insured up to $250,000. That is not true, because different products that a bank offers are either insurable or non-insurable. So the FDIC is moving to change this. This is exactly what happened with, was it Silicon Valley Bank, where they walked in, they go, 80% of these accounts are not insurable, but we're going to go ahead and do it this time. And it gave the public a very serious sense of false security. It was a false sense of security that gave them, because that was the first one that went down. We have over 700 banks in trouble right now around the country. The Federal Reserve already came out and said in the spring. So they're trying to tell you now, we're going to make it so blaringly obvious on every website. We're also going to tell you the difference between the FDIC insured accounts and the non-ones. So you need to go and check which accounts of yours are insured by FDIC or not. And you need to get that in writing from the bank. Now, it's not like a panic thing, because the banks aren't crashing tomorrow. But think about it. You just need to know, when you look at your account, it says right on top of there, is this insured by FDIC? Okay, I'm good. Because there are a lot of people with millions and millions. I know people with millions of dollars in one bank account. I'm like, are you high? Are you high? But they are. Because think about it. They're not expecting a banking crash. Well, how often does that happen? Every 100 years? Well, actually, in the last 20 years, it's happened twice. During the Great Recession, when you saw things like Washington Mutual and that kind of stuff disappear, and all these other banks disappear, there were people around the country that actually lost a lot of money. I know you didn't hear about it because you didn't, but here's the thing. What happens now if the crash is bigger? See, that's where preparedness meets opportunity. That's luck. So they go on to say here, for so many customers, these channels may serve as the primary method of accessing banking products, acting essentially as a digital teller window. They're talking about online banks. Gutenberg, he works for the FDIC, said it is important to require a digital sign so that customers can confirm when they're interacting directly with a bank rather than a non-bank entity, and to clarify when their funds are insured by the FDIC and when they are not. The FDIC noted that the revision was due to the substantially more online nature of banking since the rule's last significant update of when? 2006. So they didn't even upgrade this past the Great Recession, right? And why did they? Now, this is so important for you to understand. Please know this. Why did the FDIC upgrade this rule last time in 2006? I already told you. The banks were crashing in 2005. That is when I was selling all my real estate. You want to learn about real estate courses or cycles, and you want to learn how to actually take advantage of this and make tens of thousands of dollars, if not hundreds of thousands during this next crash, then I'm going to put 80% off links down below to the real estate crash course. When they're gone, they're gone. And at the end of the year, they'll never be this cost again. But think about this. Banks were crashing in 2005. FDIC was already getting calls and they were already having to come in and insure deposits, right? You can go back and type in FDIC insuring deposits 2005 and look past the first 5 pages of Google and you'll find the old news stories. So they went out and revised it in 2006. Now look, 2023, we've got banks crashing. And now for 2024, oh, we're going to revise the rule. We're going to make it more apparent. Now think about that. What did they also do back in 2005, 2006? They upped the FDIC insurance limit. George Bush made sure of this. He said, hey, we're upping it from 100,000 to 250,000. Do you want to know why they did that? It was because people were losing faith and confidence in the bank. This is exactly in line with the leaked video I shared with you at the beginning of this live stream. If you didn't see it, go back to this or replay it because it's very important. They don't want you to know that it's crashing. They don't want you to know while they're moving out, while Warren Buffett's selling stocks, all these, the Jeff Bezos and Jamie Dimon are selling stocks. Don't worry about it. Everything's fine because something big's coming and they're getting ready. Now it says here, so considering the evolving designs of the physical branches, bank branches, where customers make deposits, the final rule also updates the agency's expectations of how banks must display the FDIC official sign on premises. Under the final rule for branches where insured deposits are received in areas other than classic teller windows, the insured institution must display the official FDIC sign conspicuously in a size large enough to be legible from such alternative deposit taking stations. Think about this. They are talking about putting a sign up now in banks to where it is in a position large enough to be legible from such alternative deposit taking stations. Alternative deposits. They are telling you that there are accounts in the big banks that are not insured by FDIC. That means that one day you'll probably see a line that says savings and checking deposits, money market and whatever deposits. They're making it clear, but most human beings will have zero clue. Zero. So the question is, do you want to have more of a clue? Are you ready to dive in? Are you ready to make generational wealth? Are you ready to actually make a change in our country? Because the rich keep getting richer and the banks keep getting fatter and they're going to take over our country because the middle class is getting small. Type it out again. Make the middle class rich again. This is what it's going to take. Being prepared for this and not scared. Now it says, across all channels, both online and physical, the FDIC will also require the use of signs to help customers explicitly differentiate insured deposit products from non-deposit products. For the latter, firms will need to also note such products are not insured by the FDIC, are not deposits, and may lose value. Think about how clear they're trying to make this. Why would they make it clear? It's because the FDIC is in trouble. The banks are crashing. I can't make this. And it takes a while. I know it sounds crazy. Look at the markets going up right now because the Fed simply said, we're going to pencil in. We'll pencil in. Do you know what pencil means? We'll pencil in 3 rate decreases in the next year. Pencil means it can be erased. They know it, but most morons out there in the market buying stocks don't, and they're just running it up. This is so insane. I even said it 2 months ago on this channel. They're going to do a head fake. Get ready for it. It's called the Great Fed Fake Out. Go and look at it. It's an older video. It's done like a month and a half ago. And look, it's already happened. We're going to pencil in 3 rate cuts. They are trying so hard to blow this bubble up even farther because what it does is as you put money into banks, and right now it's happening, some money is moving back from money markets into traditional banking accounts. Money's moving to stocks. It produces something called liquidity so that they can sell their stocks because they have a lot of stock and it doesn't mess with the market. I wish more people understood liquidity events, not only on the bad side where people can't find liquidity, but on the good side where companies provide liquidity for themselves by advertising or putting out propaganda. Now it says here, the final rule provides examples of scenarios where misleading information can confuse consumers about whether they're engaging with an insured depository institution and expressly prohibits the use of FDIC-related imagery or terminology in marketing materials that incorrectly imply uninsured financial products or entities are FDIC insured. This regulatory update comes on the heels of the agency's efforts to educate the public on deposit insurance coverage. The agency's Know Your Risk, Protect Your Money public awareness campaign has aimed to help customers better understand deposit insurance after the public's uncertainty about coverage became clear during the banking crisis of 2023. I hate this crap. So think about that bull crap propaganda. We're trying to just make you aware. But I just showed you a leaked video in November, like, don't let anyone know. The banks are crashing. It's going to be bad. Just think about that. If you didn't see that video, I put it at the beginning of this live stream. Restart the live stream and watch it from the beginning. And you'll understand why I'm so pissed off. This is not a joke. But you know what? I've only got so much time to warn you. The channels have already been hit so dang hard, it's insane. Because, especially on the Economic Ninja channel, it's gone so bad, there are people that are following on Google have contacted me and said, dude, big fans, this is what we're doing. Go warn the people. Then we leave the subscribed button on, and it looks like it's on, but they took the D off. And friends of mine are calling me like, how am I getting unsubscribed? I can't even hit the thumbs up button. It's because the truth is, they don't want you knowing this truth. They don't want you knowing it. Now, is it something you need to go scream and panic and go run down next Tuesday to go move our bank accounts? No, it doesn't. But do you need to diversify your bank accounts? Heck yeah. The guy I know that has millions of dollars in one bank account, it strictly says right there, we're insuring it at 250. Yeah, you're bummed, bro. During the Lehman Brothers crisis, there were people that lost so much. As a matter of fact, if any of you were in here and you had more than $250,000 in your bank account and you lost the balance, like you had 300,000 and you had $50,000 lost during a bank that crashed in 2007 to 2008, please put it down below. But that is a harsh reality. And the thing is, because nobody's interviewing those people on the mainstream media, you don't even think it exists, but it does. People lose money all the time. Now, it says here, in the same meeting, the FDIC board of directors approved, oh, who cares about their budget? They should be defunded. That they're talking about the budget. Okay, they talk about crypto assets. Crypto assets are generally not deposits. Do not think your crypto assets are FDIC insured. Do not. If you aren't holding them, you don't own them. If they're on exchange, you're screwed if that exchange goes down or if they do a trading halt. Any XRP holders know that. So anyway, my point being is I'm gonna finish with just this one last thing. I want you to realize this.
When people need.
I want you to just think about this one last thing, because so many people jumped on here. And guys, if you want to take advantage, I'm going to put a handful of links down to the 80% off the real estate crash course, because this is all proof that this isn't getting better. And what happens next is the banks tighten their financial situations and they stop lending. And get ready for what happens to real estate then. You want to know why? Because sellers, they still need to sell. That's what people don't realize. And inventory is already picking up across the nation. And across the nation, home prices are already falling. But the thing is, it really picks up when the fear hits. And no penciled in drop in rates are going to help you. So check this out one more time.
No, but I don't think you have much hope of reaching a public that doesn't have a professional need to know.
A professional need to know.
I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets. They just assume they're going to pay my claim. Right? I think you've got to
type 1 if you take this serious. Type 2 if you think I'm just making this up.
That has more full faith and confidence in the banking system than maybe people in this room do. That we want them to have full faith and confidence in the banking system. They know the FDIC insurance is there. They know it works. They put their money in. They're going to get their money out. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people that charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out.
And remember, that was not this last November, but it was November of 2022. And since then, this summer, the FDIC has come out and said, we're done. We don't have enough money to insure any more bank accounts. So they're asking the big banks to come in. And now the big banks are coming out. And now they just came out in front of Congress and said, we don't have the money. So what are you going to do? What's 2024 going to look like? What's 2025 going to look like? I don't think inflation's going away. And people think for some reason that the Federal Reserve, a private bank that loves consolidating all of the little banks, is going to ride up in a white horse and drop interest rates. They've never done it in history, unless it's politically motivated. They've never done it in history. And the 3 times they've done it since the 70s, the mid 70s, I teach this in my real estate course, they faked out. They dropped it a few points during a period of time, and then they head faked, and it shot even higher right after that. And I believe that's what's coming. And a lot of people are going to be deceived. A lot of people are going to dive into real estate. They have no idea what's coming. And the commercial real estate market is even worse. This is a big deal. But remember, this is the good news. If you're ready for it, you're going to dominate it. You're going to crush it. If you're part of Ninja Nation, you're a type of person that's prepared and not scared, and you get ready for this stuff because you know that you can't stop it. So you better stop it by being a part of it and taking advantage of it and taking that wealth back from the government officials, back from the big banks, and back from the elites. And you know what? You become the elite. End of story. Mic drop moment. The middle class. We need to make the middle class rich again. Repeat it with me. Type it down. Thank you for everyone that shares these videos. Thank you to everybody that's subscribed to this channel. This is not the Economic Ninja channel. It's been blowing up. Thank you to the 100,000 subscribers. I really appreciate you. The Real Estate Ninja is out.